Historically, Bitcoin has performed a last pre-halving retrace around the halving event. This has been the case in 2020, but also in 2016. We're going to be talking about these pre-halving retraces and what we can learn from them just to better position ourselves and understand what could potentially lie ahead in the future. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. First of all, Bitcoin is very much in its pre-halving rally. It's alive and well. We are currently approximately halfway through the pre-halving rally phase. This phase tends to begin 60 days before the halving, and we see a lot of uninterrupted upside during that time. This has been the case in 2020 and also 2016. But we have to understand that at some point we do perform a local top and perform a pre-halving retrace. So let's talk about that in a bit more detail, because as we near the halving, there's going to be scope for volatility, because historically we've seen a lot of that volatility occur. But what could we potentially expect going forward? Well, in 2020, we saw a 19% pre-halving retrace approximately 7 to 14 days before the halving. So very close shave. Bitcoin got very close to the halving event itself before experiencing some sort of volatility and then sideways price action. So a 19% pullback approximately 7 to 14 days before the halving. That was the case in 2020 for a last pre-halving retrace. Whereas here in 2016, we saw 28 days before the halving event, we saw a 29% correction last over 77 days or so. But if you want to be on the conservative side, that's 29%, but 40% is the deeper, more extreme downside wicking case here, which may not be as likely as simply thinking about a 20% to 30% pullback. But that brings us in general to a danger zone of 14 to 28 days, right? Because this was 28 days before the halving, where we saw a local top and then a pre-halving retrace occur. Approximately 7 to 14 days before the halving is where we saw a 2020 pullback occur. So that gives us a 28-day window, roughly speaking, of where there could be a danger zone for Bitcoin potentially local topping and pulling back into its pre-halving retrace. So this is still a way away, because we're currently still 42 days away from the halving, and that translates to approximately 3 full weeks until we enter this danger zone. So even though we are still firmly in this pre-halving rally phase and we're halfway through it, still there's scope for a bit more upside over the coming 3 weeks, whether it's going to be uninterrupted upside or it's going to be sideways price action enabling altcoin moves. Still there's scope for this pre-halving rally phase to be enjoyed before we enter this 28-day window for a potential local top before we pre-halving retrace. And it's very unclear at this time, because we're on the cusp of breaking to new all-time highs right now. So we're in this final major resistance era before we enter price discovery. So very difficult to say where we're going to top out exactly. But until we haven't broken beyond here, this is going to be that last potential point of rejection. But if we do break out to those price discovery levels, then it's going to be difficult to try and pinpoint where that rejection will take place. However, still a healthy pullback needs to occur at some point. And the halving catalyst, once it's come to fruition, tends to be a great moment and milestone for pulling back. This has at least been historically the case. So a danger zone is over here for that last pre-halving retrace, and 20% from here would be interesting. That would be approximately 13k towards the downside. So that would get us to 52k, roughly speaking, whereas a 30% retrace would be even deeper than that. It would get us down from current levels by approximately 21k, and that's pretty crazy to think that we could still get to 44k. So if we were to see a repeat of 2020, that gets us to 52k. And a repeat of 2016 would get us to 44k. Is that even possible? And 44k is around this level here. 44 is the top of this range high reaccumulation range right over here, which we broke out from. So a pullback into there, technically that would be a retest attempt, but it just seems so far-fetched. And we don't really need to see pullbacks of those reaccumulation ranges as we've seen right over here. This had a breakout, no looking back. This was a downside wick that didn't even really get us too close to this range. But as you can see, no real pulling back into the range high. If we were to extrapolate this, we still don't get close to that range high reaccumulation retest. And same thing here. So why should we assume that we could get a retest of 44k if all year in 2023 and even going into 2024 we didn't get a retest of the range high reaccumulation? So a 30% retrace from here is probably going to be highly unlikely based on the demand that we're seeing, but also based on the technicals of those post-breakout retests, which simply don't occur. So maybe a 20% retrace or anything between 20 to 30% is more realistic, but it won't get to that absolute picture perfect retest of that 30% retrace. So anything in between there, even still very difficult to anticipate or at least try to expect some sort of retracement at this point in the cycle. Even if we did see a 29% retrace right over here over 77 days, even though we saw a 19% retrace and forming a reaccumulation range around the halving event, depending on where we top out here for Bitcoin, whether it's just at these old all-time highs or even in price discovery beyond these old all-time highs, it would be really interesting to see what sort of a pullback can we anticipate? Because if we focus on the old all-time highs getting breached in 2020, for instance, then still we do see dipping. Dipping does occur in the bull market parabolic phase. This has historically been the post-halving parabolic phase, but because of how we're behaving right now, it's very difficult to just think that, wow, could we actually have a parabolic phase in the pre-halving period? And if we do break 69k, then maybe we'll get this historic breakout after all. But even looking to the parabolic phases, you can see that pullbacks do occur. Shallow dips, these are very quick opportunities for scooping up on the dips. Even pullbacks tend to occur later on in the cycle as well. So even if we break to new all-time highs, pulling back isn't an impossibility. And just this recent cycle showcases that. So if we do break to new all-time highs, that doesn't rule out a pre-halving retrace occurring. It just means that this pre-halving retrace would have to occur at a higher price than we initially thought it would. Generally, this blue circle is denoting a phase. And this could be over here, could be over here, could be over here. It doesn't mean that I'm expecting to see a drop into 44k. This is just denoting the phase that around the halving we tend to see downside volatility, and that could see us go into the lower 60s, the higher 50s. Really depends on what sort of retrace we could see, whether it's 20% or so. But remember, only this past January, despite how strong this uptrend has already been, we've seen an 18% pullback this past January. So this was only just over a month and a half ago. So that doesn't mean we can't see an 18% pullback once again. And if we were to see an 18% pullback once again, that would be very reminiscent of the COVID time where we saw a 19% pullback. So essentially, this 19% pullback occurred this past January, and who's to say that it couldn't occur also this coming April as part of that pre-halving retrace? A 20% pullback around the halving isn't out of the ordinary, and a 20% pullback earlier this year also isn't out of the ordinary. And just notice how this 18% pullback occurred once we had those ETFs out there. So this was a catalyst coming to fruition, and now we're already seeing this catalyst really pay dividends, and we're seeing the rewards come from that. But still, around the catalyst coming to fruition, we saw a pullback. So what if around the halving, once this catalyst comes to fruition, it will still shake out a lot of speculators and short-term traders? We could still see, once this catalyst comes to fruition, so we could see a pullback, maybe even a repeat of January in the form of a 20%, 18% pullback. But then afterwards, we would see further upside simply take place. If we were to see history repeat, and the not so distant history repeat in that way, then it makes perfect sense why an at least 20% correction could take place. It would be healthy for this uptrend. This uptrend has been historic thus far, and for 1, 2, 3, 4, 5, 6, 7 weeks, this is now the 7th week, we've only really seen one 4% dip. So that just gives us perspective into how uninterrupted this uptrend and how strong this uptrend has been since effectively 40k or so. So still lots to come, but really important to understand that a pre-halving retrace wouldn't be out of the ordinary, and an 18% pre-halving retrace also wouldn't be out of the ordinary, especially since we saw something similar this past January. So nothing to fear, but at least it would be wise to be prepared for such an eventuality. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.